25% of the entire S&P 500 is reporting this week. And we're not talking small names. We're not talking one specific sector like we were talking 2 weeks, or a slew of other reports that really didn't have a major impact last week, outside the Netflix. You're talking the Apples of the world. You're talking the Microsofts of the world. You're talking Teslas of the world. You're talking the Facebooks and the Johnson and Johnsons. And so when you're talking about some of those major companies, let's take a look at Apple here. In the last quarter, I wouldn't say relative to what some of those storylines in the market has been. Apple, relative to that, not doing much in the last quarter. Outside of that, it's up 20% in the last quarter. Apple's done amazing in the last quarter when you're thinking about it just over a 3-month stretch. We're talking about a company that's added $500 billion in market cap that is expected, think about this expectation, is expected to top that $100 billion revenue mark that is typically only reserved for companies like Walmart and the like. So Apple, a lot of anticipation coming into the report this week. Apple's had some front running, on the backs of what happened with Netflix last week. It's up from that 125 all the way to 145 at the top end of the channel here today. So you're having some front running in Apple just in the last week in front of earnings. Again, that in large part due to what happened with Netflix last week. And you're also talking about the number one company in the market that's up over 20% in the last quarter. So can we see the continuation? And people are looking at Apple right now and being like, when's Apple going to join the parade? Apple's been joining the parade. It's been doing absolutely amazing. And when you think about it quarter to quarter, you're up 20% in the biggest company in the marketplace. You got to show me a little bit. I think the anticipation's got to be, Apple's got to come in and match the price action here. And so I do think with Apple, it's a little bit of a show me. When you're looking at some of those other stocks this week, Microsoft, unlike Apple, Microsoft's just been kind of stuck in this long-term range, and probably even more so than Apple. I'm looking forward to Microsoft this week, and I'm looking at Microsoft from a 230 perspective. Obviously, a lot of people invest in Microsoft, but when you're looking at the Microsoft, this is a company that over the last 10 years has not only reinvented its own wheel to a certain extent, has absolutely dominated the marketplace, and you haven't had a lot of longer term consolidations in Microsoft in that 10-year stretch. You had one coming into 13 and 14, 15 here where you went net neutrality between 40 and 48 for a good year before you broke out. You saw the same thing occur before you broke out again. You saw the same thing occur before you broke out, same thing occur before you broke out. You've only had 6 or 7 moments of consolidation in Microsoft's run where it gave you a really, really, really good position trader, investor, swing trader, whatever they're looking at, technical condition. And so when we're looking at the technical condition on Microsoft, given the consolidation and the time frame in the consolidation, people who like, I know with GameStop, Tilray and all those other craziness, you don't like it to be in the cooker. Traditional traders and investors, we'd like things to be in the cooker for a little bit. We like them to get perfect, and Microsoft is setting up in that environment where you have a very, very, very good opportunity with a positive response on an earnings report to break out of this longer term consolidation. Think about it from Microsoft from the market's perspective. This is the market right here as Microsoft is going absolutely nowhere. Can Microsoft, a leader in the market, can Microsoft, one of the best performing stocks in the last 10 years, can Microsoft, the second biggest company in the market today, can they break out of this lull that they've basically been, singing a lullaby, lulling people to sleep? And then all of a sudden it breaks out and people are like, hey, let's go trade GameStop, when the rest of us are looking at this Microsoft chart being like, let's break out on Microsoft. You guys enjoy your GameStop. Give me this, 10 months of consolidation in Microsoft. Give me this increasing support level in Microsoft while I have a horizontal clean trigger above 232. Give me that consolidation. Can Microsoft complete the storyline this week, break out on a positive earnings report? I'm looking forward to Microsoft. Looking at Tesla, we know what Tesla has meant to the marketplace. We know what Tesla has meant to those high flyers in the past year. Can Tesla at the high price, and guys, this isn't even showing the lunacy that's happened in Tesla and the craziness in the last year. And Tesla in the last quarter, guys, we're talking about a company that's up over 100% in the last quarter. Over 100% in the last quarter. This is, again, not a stock like GameStop. This is a massive, massive, massive company that everybody tracks. Can they show me? This is a Goldman moment for Tesla in the short term. Can you show me? Can you show me that fifth consecutive quarter of profitability? Can you show me that? Can you show me that you can withstand this level of anticipation at this high of a price with this many eyes on you? This is a moment for Tesla this week. And then Facebook's going to absolutely crush their overall earnings numbers. Facebook's going to come in and they're going to report a very, very, very good earnings report. But the question is, Facebook's had a lot of eyes on it as well in recent history. Can Facebook show some love and break out of this consolidation? I don't have the same feeling on Facebook. Obviously, I do say on Microsoft, but Facebook's been held back from the market a little bit in recent history. Obviously, it's had a lot of eyes on it from a political perspective. Does that have an impact on the earnings? Does at some point, does the hate Facebook have actually show up in the earnings numbers? I don't think it's going to be this quarter, but that doesn't mean the market's going to respond positively to that report. But I'm anticipating Facebook here as well. So in front of this week, man, we don't have a lot of news here today, but we got a lot of fireworks getting set up this week that's going to really have an impact on this market, both in the short term, i.e. the response to the specific earnings this week, and also in the long term. Answering those questions to Apple, Microsoft, Tesla, and Facebook, I think is going to go a long way to see where we actually end up in earnings and from a price performance relative to earnings in the first quarter. And then quite frankly, Tim, we've only had 13% of companies report earnings so far here this quarter so far. Most of those in the banking sector. We've gotten through a lot of those. But out of those 13% that report, I want to give you a couple numbers real quick. 86% of those companies have beaten the estimates on EPS numbers. That is an all-time high so far. Now we're early, the same way we were early last quarter as well, but we were at 83% at this point last quarter. We're at 86% right now. Also, we're expecting a net average of a negative 4.7% decline. That will be the fourth consecutive quarter of negative earnings decline. That is a depression era type number, guys. So just a little bit of a backdrop to what we're all doing here. 86% of companies reporting positive EPS guidance. Those numbers relative to performance year over year equate to a negative 4.7% drop in earnings. That's the fourth consecutive quarter. That is depression style type metrics when you're talking about fourth consecutive quarter of negative earnings. 2 companies have issued a revised negative guidance. 9 companies so far have issued positive guidance. So we're early on in earnings season. So far it's been positive. The market response has been positive, but earnings season really starts this week.